Monday, July 1st, market analysis, Stan Ehrlich. Good morning, about 10:10 California time. So slightly late today. But the important thing is we have a bunch of reversals again in the stock market indexes during simply the last week and a couple of days. On Thursday, the 20th, the day after Juneteenth, we had a bearish engulfing. 2 trading days later, on Monday of last week, we had another bearish engulfing. And Friday, we had a third bearish engulfing, but also on Friday, the market rallied sharply earlier in the day, came very close to making, or in a couple of cases did make, slight new highs for the trend. New historic highs, in this case did not, in the E-mini, and dropped like a rock, making new lows and creating a bearish engulfing outside down day ER sell signal. Now, the little bounce today doesn't mean anything to me. As a matter of fact, ER3 needs to do this so that it can get short around the middle of Friday's range. It's not running at the moment. Only the ER1 scalp is running. I'm looking for the low of today to be taken out on a closing basis, and we will have a new low and a new low close. We have the new low already, but we're bouncing. We'll have a new low and a new low close since the first reversal, which is still the top of the market. We've caught the top of the market so far. And this double top formation, we have a sell signal on both highs. Much like the DIA, but it's over several weeks on the DIA, the Dow, the YM. But the E-mini is only over a, 7-day period. The 5-minute chart, bearish engulfing on the 20th. On the 24th, another bearish engulfing, and you're looking at the details. And Friday, another bearish engulfing. I'm looking for lower levels. This market has come up into a little bit of resistance for the last several days, which lasts, I suppose, up to approximately 55.60. Above, well, let's call it 55.65. Above that, I would get very nervous about the double top being taken out. But any rally up to that level or somewhat lower, maybe we've done it already, should be, in my opinion, watched for short sale entries. Next chart, spider, double top formation, 3 sale signals in the last 7 days, I believe it is. 1, 2, 3, 4, 5, 6, 7 is correct. Yes, just of course like the E-mini. And double top, bearish engulfing Friday, looking for new lows, and the closing price needs to be below the previous bunch of previous lows. I'd say a week, but more the better. The harder the fall, the better the breakout in this particular case, and in most cases. Next chart is the spider 5-minute. We attacked the lowest low, coming extremely close, basically touching it during this double top, so no breakout, even at the low of the dip. This rally doesn't do anything for me. I'm just looking for it to drop, and maybe today into new low ground, but I think this week and very soon, probably, we're looking at the QQQ double top again. 2 sell signals, both of the highs, and all I'm doing is sitting back and waiting for a new low close. Now, on the QQQ, the minimum downside objective on the small pattern is 460 approximately, but that's not the story. This is a more important top, in my opinion, although the size isn't very large time-wise, and I'm expecting at least 450 on the downside, and I can't rule out something down to the low 400s, to be honest with you. Yeah, we'll see what happens. QQQ 5-minute, No lower low, no breakout, not even all that close. But the rally today at this particular point is not that much, not disturbing, and we still have this double top. I like it. Next, we have only one sell signal on the top of the NASDAQ futures, unfortunately, but it's still the high day. I don't have any problem with the way the market has been acting in the last week and a half. I'm looking for a new low and a new low close. This is the NASDAQ September 5-minute chart. Just looking for it to start heading Tierra del Fuego, head south. The YM, we have a broad double top. The first high was on April Fool's Day, April 1st, and another bearish engulfing sell signal at the same highs, basically creating a double top formation on May 20th. Now, also between the two highs is your lowest low, which was a bullish engulfing buy signal. We have a sell signal on the high, buy on the low, a sell on the high, and on Friday we had another sell signal. Now, I don't mind the rally. It came very close to making a higher high than Friday, but it didn't do it. We're still up a little on the day. I think somebody's going to knock the stilts out from underneath the market very soon, and it's going to start to drop pretty quick. My minimum downside objective on this particular double top formation for the DIA YM symbol 35,067 and maybe lower, but that's the minimum. This is the biggest formation of all the indexes, but really weirdly, it's the same formation, just a different size. Well, that's very unusual. Next, YM, we're looking at the sell signal on Friday. Actually, unfortunately, day trade loss, but no problem with the bounce this morning. Came close to a new higher high than Friday, but didn't do it. I'm looking for the stilts to get knocked out from under the market. Okay, the Russell. Not too much going on here. Major resistances stopped it again. I'm looking for a move down to probably 1950. And here's the short-term 1 minute on the Russell. Bonds and notes. Then we're doing the energies, crude, heat, unleaded, etc. The bond market has dropped sharply today, a couple of points lower. I'm looking at 116.03. Now, on Friday, it met my minimum downside objective on the small double top formation. Weren't any sell signals on the highest highs, unfortunately. The formation was still good, still worked great. So now it's surpassed it by quite a bit today, and I'm looking for a lower low down to support 15.08, 15.10, something like that, 115.10. We are oversold right now at today's lows, coming close to a turn, but I think we're going to hit the support level first and then turn back up. And I'm going to say the same thing basically on notes, except notes are not quite oversold. Super close, bouncing off of a support level at the moment. I think there's a chance in notes that it could actually hold in this area and have a little bit of a bounce. I don't think the turn I'm expecting in the next couple of days back up again in the interest rate futures is going to make new highs for the trend. I still expect this market to be going basically sideways, maybe even a little bit bearish tinge to it during the next few weeks on the average, but I'm long-term bullish. No ifs, ands, or buts about that. Crude, sharp rally, high and last, new highs. All the activity today is above now a support area, which it got up to and through. Bearish engulfing didn't work. Sideways a few days, new highs, and now it looks like it's going to test the highs for the last several months at about 86.25. Wouldn't be surprised to see that maybe this week. 83.08 at the moment. Now we are overbought, so we could have a minor correction, but I think the next move is a zigzag on the upside. Natural gas, pretty much the opposite, coming down to support and oversold. Going back to crude for a second, overbought going up to some resistance, and then natural gas oversold and coming down to some support. Unusual. The downside objective on this pattern is supposed to be 1.963. It broke out on Friday on the close, and all of today's price action is in totally new low ground. Again, getting oversold for the first time for a while, quite a while, since what was this? March 28th. Yeah, first time it's oversold since March 28th, close to support. So I expect a bounce, but that's about it for the moment. What about heating oil? Now, it got overbought today, like a week or so ago, when we had a bearish engulfing that worked for about a day, but there was still profit potential in that easily. We have an outside trading range day today, but because we are currently higher by 0.0661, we're not having an outside down day. We need to close below the closing price, which I believe is around 2.5818, the close of Friday, 2.5813 exactly. And if it does that, we will turn red. We will have a bearish engulfing with the high on Friday and today approximately at the top of a resistance area with overbought conditions as of today. Prime target for a turn down. Let's see if it can close on weakness and get a red bearish engulfing. Tomorrow it'll show up. Gold, silver, platinum, copper. Not too much happening in the gold at the moment, down a couple of dollars on the day. We've got a double top formation. We didn't get any signals on the two highs, unfortunately, but it was overbought on both of them. The downside breakout has yet to stick because we didn't close below the previous low, the lowest low between the two highs. We attacked it, made minor new lows by just a tiny bit, but on a closing basis, it wasn't a breakout. We bounced back now on Thursday, a little bit more on Friday, and today we're just going sideways a little lower. I think it's about to break below that breakout level of 2306 or so and go down to 2143. Next, silver has already broken out of its head and shoulder top. Now on silver and on platinum, you're going to see in a minute, I have outlined, well, I didn't outline. So where's my zigzaggy thing? Control F4, okay. And I'll do this. Okay, good. And I'll just drop it right there. Okay, now let's duplicate it 2 times and grab one of them. This is the head of the formation. Grab the other one, and this is the last shoulder high. I had pinpointed Tuesday of last week as the high day and the price level of 3150-ish. Yeah. I ended up topping out a little lower and on the previous Friday, 2 days early with silver. It broke out to the downside early last week, Tuesday. The rally on Friday came back up and touched the neckline very nicely, right out of a textbook. And now we're seeing slight strength. New lows are expected immediately, very soon. Today, tomorrow, the next day, real soon, without any high and or especially a close above the neckline, which is this yellow line right here, of course. So, on the way down, how far? Minimum downside objective 24.30. Next chart. Another head and shoulder top, and I'll do the same little markings here. And there we go. And copy it twice. And simply move one of the copies to the top of the formation, which in this case was a bearish engulfing ER sell signal exactly on the top of the market. Now, this last shoulder high I had pegged for, again, Tuesday last week, but it was on Wednesday. And it was in the green circle, but a little higher and 1 day late than my expectations. That was pretty close to exactly the time and price that I had forecasted. Hard enough to forecast one of them, let alone both. So that one came closer than silver, but I got the shoulder anyway. Now the neckline we're coming close to. We've got new lows for a week and a half. I'm looking for a downside breakout probably this week. Therefore, the downside objective is at the moment around 790. I can get a little bit more accurate once I know which day it's broken the neckline and move this measuring stick, so to speak, the depth of the formation just a little bit to the right or left. It'll change the objective a very small amount. The number I gave you, 790, is good enough, probably. Next, hot copper. Unfortunately, no sell signal on the top. It was overbought. We are bouncing off of some support. It's holding fairly well. I think it could bounce a little bit more, but not much. I'm going to say 4.444, maybe up to 4.588. Minor amount. And then turn down. We got soybean oil meal, corn, wheat, cattle, and hogs coming up. Soybeans look miserable. They are not doing very well. Now, granted, they're up a little on the day at the moment, and this is after it made a new low for the trend. But for the last couple of days, we've been making new lows for the trend. It's very important. It's the lowest lows for many, many, many months. You have to go back to, oh gosh, about January of 22, a couple of years, 2.5 years, to have a lower low. 23, 22, yep. Okay. This looks like a long-term major bearish breakout. All right, having said that, I am long-term bearish. The upside bounce we might be starting because we're close to oversold should be feeble, minor, and probably at best up to about 1140. We're 1108 now. I think it could stop lower than that and turn down. I just think the damn thing's about to fall apart like corn has done. Let's go see corn in a moment. Soybean oil is totally the opposite momentarily, rallying quite a bit and wow, getting super close to overbought. So therefore, this rally is probably going to fail. And it's going to do what I think beans are about to do and what corn has done. So I wouldn't consider this a bullish activity, frankly. I think it's about to turn down, and it's almost overbought, 74.47 at the moment, with an RSI high today of 74.59. So almost there right now, almost high and last, it looks like. What do we got for meal? A lot of nothing, very neutral. RSI 45, very neutral. But I think it's also about to head south. All three, beans, oil, meal. Okay, here comes corn. Whoops, crash corn. Dropped like a rock on Friday. Dropped in the new low ground for a long period of time. Today we've got a little doji bouncing very slightly. That's about it. Frankly, I don't see anything that tickles my fancy here. The rally could be up to a minimum of 420 from 405. And I can't rule out a little bit of digging into the resistance above the market, which is considerable. 441 looks plausible, and maybe a squeak more. But frankly, this is so bearish long-term. Look at this long-term chart. This is a new low in corn since April of 21. Again, early 21, like beans. Wheat, managing to hang in there, bounced off of previous lows late last week, well, middle of last week, Wednesday, oversold. Okay, so we got a little bounce. Where's it going? Probably a lot of nowhere. And I think it's also going to follow the rest of the grains heading south here. I don't see anything particularly bullish. Yes, it could turn into a broad double bottom. I doubt it. Not with everything else grain-wise being negative in general, in my opinion. Okay, cattle. Overbought, bumped against resistance, dropped off like a rock today. Very good. Dropped into a support area, even dropped below it. I think it's probably going to come off to 181. But the longer term trend is usually your friend. Are we going to double top out here on a very broad double top last September and then this year, July or late August? I meant, late May. There's a chance of that. We have to keep a close eye. For the moment, my downside dip is 181.5. And we've got hogs. We got the top of the market in hogs. It was a head and shoulder top. I'm going to have to drop this down a little bit and drop this down to here. Now that we've rolled into a new contract month, August, the neckline didn't cooperate very nicely for the August and continuation data, but overall the pattern did work. But your initial downside breakout, which was on May 5/13, shouldn't have allowed 1, 2, 3 days of move back up above and even a close above, one close above the neckline, slightly, but above. Not supposed to happen. And a bullish engulfing, which died immediately. So the pattern worked with that little exception about closing above the neckline for only 1 day and a bullish engulfing that got killed immediately. That's a sign that it's very weak. And that's it for today. Let's check the E-mini real quick here before we go. Okay, not doing too much momentarily. 5-minute chart, a little sideways. You guys have a great trading day, profitable trading to you.